The essence of IAS 20 Government Grants and Disclosure of Government Assistance. Government grant means assistance by government in the form of transfers of resources to an entity in return for past or future compliance with certain conditions relating to the operating activities of the entity. They exclude those forms of government assistance which cannot reasonably have a value placed upon them, and transactions with government which cannot be distinguished from the normal trading transactions of the entity. Forgivable loans are the loans for which the lender undertakes to waive repayment under certain prescribed conditions. Recognition of government grants. The grants are not recognized until there is a reasonable assurance that the conditions will be complied with and the grant will be received. Accounting treatment. If the grant is relating to income, then it is shown in profit or loss, either separately or as part of other income, or alternatively deducted from the related assets. Grants related to assets. These are the government grants whose primary condition is that an entity qualifying for them should purchase, construct, or otherwise acquire non-current assets. Subsidy conditions may also be attached, restricting the type or location of the assets or the periods during which they are to be acquired or held. Government grants relating to assets are presented in Statement of Financial Position either as a deferred income, like debiting cash and crediting deferred income. This is then released to profit or loss account over the useful life of the asset, effectively over the same period as the asset is being depreciated, or by deducting the grant in calculating the carrying amount of the asset. In case of grants for non-depreciable assets, certain obligations may need to be fulfilled, in which case the grant should be recognized as income over the periods in which the cost of meeting the obligation is incurred. For example, if a piece of land is granted on the condition that a building is erected on it, then the grant should be recognized as income over the useful life of the building. There may be a series of conditions attached to a grant in the nature of a package of a financial aid. An entity must take care to identify precisely those conditions which give rise to costs that in turn determine the periods over which the grant will be earned. When appropriate, the grant may be split and the parts allocated on different bases. Repayment of grants. A government grant that becomes repayable is accounted for as a change in accounting estimates in accordance with IAS 8 accounting policies, changes in accounting estimates, and errors. Repayment of grants relating to income are applied first against any unamortized deferred credit and then in profit or loss. Repayments of grants relating to assets are recorded by increasing the carrying amount of the asset or reducing the deferred income balance. Any resultant cumulative extra depreciation is recognized in profit or loss immediately.